Good afternoon once again. I haven't had your replies. Good afternoon. This is the monetary policy statement for December 2016. The consumer price index data for November 2016 indicates a slight pickup of inflation, largely due to bad weather conditions that have affected food crop production. With the exception of energy, fuel, and utilities, EFU inflation, which declined to minus 4.1% from minus 1.9% in October 2016, the rest of the components of inflation edged up in November 2016. Annual headline inflation rose from 4.6%. Annual headline inflation rose to 4.6% from 4.1% in October 2016, driven by a sharp rise in food crops and related items inflation. Food crops and related items inflation rose to 7.1% from 1.7% over the same period. That was a huge increase. The annual core inflation increased marginally, 5.2% in November, from 5.1% in October 2016. The domestic economy is continuing to grow moderately, driven mainly by public investment. The Bank of Uganda's composite indicator of economic activity improved between August and September, although growth decelerated in October 2016. The outlook for private investment remains subdued, although measures of business sentiment remain above average. The overall economic outlook remains largely unchanged from the one in the monetary policy statement of October 2016. The real GDP growth forecast remains at around 5% for 2016-17, 5.5% for 27-18, and 6% for 2018-19. There are downside risks to the projected growth rate, largely emanating from the uncertain global economic developments. The economies of some of our trading partners are expected to grow at a slower pace than previously assessed, which will continue to weigh down on our exports. In addition, the shilling has continued sharp depreciation. So the shilling has continued sharp adjustments and significant volatility due to continuing uncertainties in global economic and policy environment. these factors could continue to cause volatility in the exchange rate of the shilling. In the short term, we forecast inflation to be slightly higher, mainly as a result of the food price hike, and the increase in fuel prices. However, we expect that inflation will be around the target of 5% in 12 months. Given that core inflation is forecast to remain around the medium-term target of 5% over the next 12 months, and in line with efforts to keep the domestic economic growth momentum, the Bank of Uganda believes that there is scope to continue easing monetary policy. Accordingly, the Bank of Uganda will reduce the central bank rate by 1 percentage point to 12%. The band on the CBR will be maintained at plus or minus 3 percentage points, and the margin on the discount rate will be maintained at 4 percentage points on the CBR. Consequently, the rediscount rate and the bank rate will be reduced 16 and 17% respectively immediately. I thank you very much.